If you're a loan originator and you've been at this game for any decent amount of time, you've at least had one, if not multiple, real estate agents ask you for kickbacks, knowing damn well that they are illegal. Yet, time and time again, the requests come in. We are going to talk about joint ventures, MSAs, and yes, how to deal with real estate agents asking for kickbacks. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Yay, Dustin, what's poppin'?
Woo woo! I'm out of the hospital, John. That's good.
Oh no, what happened?
Oh no, what happened? Yes, as I sit here wearing my heart monitor, oh no, what happened? There's this thing, y'all.
So you got to shit into a bag now?
No, a heart monitor. Yeah,
Right.
not a colostomy bag.
That's a cat. Oh,
Nope. You saw a catheter?
yeah.
No, that's a tube in your urethra that goes into your bladder and sucks out your urine.
Oh,
No, I'm wearing a heart monitor because I was diagnosed with AFib. AFib. It's longer than that, but just know I suck with big medical words. But it's like atrium fibrillation. Anyhow, people are gonna make fun of me now. AFib. Spent 4 nights in the hospital. Shout out to the good folks at the HFC Oviedo Medical Center, wherever I was.
It took long enough for them to build that, by the way. Shout out to Oviedo finally having a hospital.
It's nice.
It's nice.
Yeah, it's a nice little hospital. But I was, so you and I went to Mastermind Summit. Then I left there. I went to Seattle with my wife, my son, my son's daughter. We hiked Mount Rainier. We did all the touristy things in Seattle. And like that last full day in Seattle, I woke up and I was like, damn, I felt like I had butterflies in my chest. My heart was pounding. And honestly, I thought, hey, this may be a little bit like anxiety.
Not just to come down from the Molly.
No Molly, right? No Molly. It was just like, yes, I had 4 or 5 drinks the day before.
Yeah.
And I was sucking down the coffee that morning. And I just thought, hey, between coffee jitters and some anxiety, maybe that's what it was. Fast forward, well, that was a Tuesday. Wednesday, it's no better. Thursday, it's no better. Friday, it's no better. I'm going to the gym. I'm trying to get on the elliptical. My heart rate's skyrocketing to like 140, 150. And thank God I wear my Garmin Phoenix, right? My training watch, because when I felt it in my chest, I was like, man, what is that? And I looked down on my watch. My watch
Danger,
was like,
danger, pull up.
Almost, yeah. It was like, hey man, your heart rate's like 90, and I was just like sitting on a park bench.
Pull up.
So super long story short, I have AFib. I got to spend 4 nights in the hospital. They had to shock me to try to get my heart to, because when you're in AFib, what it means is that your heart is not beating in rhythm. It's off rhythm. So one of the treatments is to put you under and then hook you up to, for me, 200 joules. And they shocked me, which hopefully would stop your heart. And then when your heart restarts, then it restarts back in rhythm. Well, the first time it didn't take. So they let me come out of the anesthesia. They take me back to my room. The next day, a round of tests. I'm stress test and all these other tests. Then they're like, okay, well, you have a super healthy heart. You have low cholesterol. You have low blood pressure. So heart's good-ish, except for the AFib. So then they put me on medicine for 24 hours. Then they put me back under, shocked me one more time. Then I was able to actually get my heart rate back in rhythm. So now I'm stuck wearing a heart rate monitor. I am on 3 different medicines for the next month.
Did they get like the good meds, the ones that make you feel good?
No, I'm on like a beta blocker, a blood thinner, and then something else that you give to patients who have AFib. But here's what I noticed and learned. Like 80% of us have AFib. Like you may have had it one day. It lasted like 3 minutes and then your heart snapped right back into it. Where my heart went 8 days and never snapped back into it on its own. And now I have to be very cognizant of it. And people with AFib, here's like 5 of the 10 symptoms, or 5 of the 10 contributing factors. It starts with, male. I'm like, yeah, check that box. Endurance athletes. I'm like, oh, check that box. Hereditary. Well, found out my dad, his sister, and his cousin all have it. Check that box. Stressed at work? Yeah, hell yeah.
No, why are you stressed at work?
Check that box.
Mm-hmm.
Caffeine use. Mm-mm. Oh, check that box. Alcohol use. Yep, you can count me on that. I checked so many boxes.
They ran out of boxes to check.
You know, John, there's even a thing called holiday heart. So holiday heart is what I could have had.
When you eat bad during the holidays?
Yeah, well, think about it. Think about it. We went to Vegas. Mm-hmm. When we went to Vegas, what did I do? I will tell you, I tripled my caffeine intake when I was out there because I woke up at 5 a.m. I put in a 20-hour day. I lived on coffee. I went out to dinner. Well, what I do? I had 2 drinks before dinner, 1 drink at dinner, 1 drink after dinner. Mm-hmm. Right? So I had doubled up on my alcohol consumption.
Don't blame it on Vegas and your drinking habits. It's just luck of the draw.
No, then I went and hiked Mount Rainier. What did I do when I was in Mount Rainier?
Thin air.
Nope. Triple the coffee consumption in the morning.
Stop drinking coffee.
And then I tripled my alcohol at night because I would get warmed up with coffee and then I would celebrate at night with alcohol.
I don't understand like the world's fascination with it.
Well, it's just caffeine. I mean, you can get it through Coca-Cola, Dr. Pepper, Mountain Dew, or pre-workout.
I could give you some uppers that won't.
I'm sure that's bad for my heart too. So nonetheless, today's episode is really and truly the byproduct of someone on YouTube actually commenting. And I think he was watching Cindy Ertman's interview. Mm-hmm. And Cindy told a story about how early on in her career, this would have been like late 80s, early 90s, by the way. Early on in her career, there's this creepy top producing realtor who literally said to her, I sleep with my title rep and she gives me kickbacks. If I'm going to work with you, I'm going to expect the same. Right? And she obviously didn't sleep with him and she didn't give him kickbacks and she ended up working with him. Then she fired him down the road, but that's her story, not ours. And you have to go listen to her episode to hear her tell the whole thing. But he commented on there. He's like, Dio, I'm in California and I have realtors asking me for kickbacks. Can you please do an episode about kickbacks?
And here we are kicking
it right back to them. Here's what I want to tell people. Some will, some won't. Who cares? Move on. Like, yes, there will always be unscrupulous players who want to do things not above board. That is Pareto's principle, the 80-20 rule. So 20%. So just imagine if you're going to go, and I hope the number's not that big. I really do. But just imagine 1 in 5 sales calls you go on, that person's going to want some kind of financial contribution for a relationship to have happen. And there are legal ways to do it and there are illegal ways to do it. Kickbacks are illegal. That is quid pro quo. Quid pro quo. Yeah, I still have a little bit of foggy brain from the anesthesia, John. Yeah. But quid pro quo.
Yeah.
Okay, we don't do that. And if it's being asked of you, think you walk the other way. I don't know what to tell someone besides, wow, that's gross. Right? Like I would encourage one of my loan officers, if a realtor straight up said, well, I only work with lenders who pay me X amount of dollars for every referral or X amount of dollars for every loan that closes, I straight up would be like, wow, that is unbelievable. Does your broker know you're doing this? Because this is someone I don't want to work with. Does your broker know you're doing this?
Absolutely not.
Okay, what would happen if your broker found out you were doing this?
Probably get rid of me and I'd lose my license.
Probably not lose your license because they'd probably go get signed up with another brokerage, but it would be maybe the first step towards losing your license. But what I tell someone is like, wow, that to me sounds like and smells like prostitution. So I don't condone prostitution. Like that's just not what I do. Now, ma'am or sir, if we work together and you bring me good marketing ideas and you want me to contribute to those marketing ideas financially, by all means, as your partner, I am open. But for me to pay you to refer me, I'd lose my license. I'd lose my livelihood. You could lose your license. You could lose your livelihood.
How would that? Someone would have to like snitch on you to find out, or they do some kind of like audit where like you can get caught with your pants down and not know it. Like
that's where I think a lot of people fail to remember. It's like this isn't like drunk driving. Oh, haha! I drove home drunk tonight and didn't kill anyone, and didn't get pulled over. It like you do that 3 days later, ain't no one gonna pull you over because you're not drunk anymore. Mm-hmm. But you start doing these types of infractions and violations. No, what happens when an audit comes in and the audit goes back 5 years, and then your name comes up for shit you did 5 years ago? So no, it's just not worth it. It's just not worth it. And quite honestly, the agents that are asking for it, They're not the type of humans you probably want to be hanging out
Is
with.
it like sleazy used car salesman, like for the lack of a better term for your stereotype, like kind of like sleazeball, like?
For me, those people are the type of people I would not want to hang out with. Yeah, because if they're willing to do that, what else are they willing to do?
Yeah.
Like, it just, no, gross.
But
Ick.
that still exists a lot even in today's day and age. Like I could see it happening back in the 80s and like 70s and like 90s, but like even like in the 2020s, 2030s.
Oh my God, John, I could tell you a story. And if it doesn't happen in that exact way, it happens in a roundabout way. One of my favorite stories to tell is I'm a rookie loan officer. The year is 2004.
Okay.
And the company that brought me into the industry was a elite Southeast boutique independent mortgage bank. Home Bank. Shout out to Home Bank, but they're not around. They didn't survive the crash.
No.
And we didn't offer ninja loans. We didn't offer negative amortization loans. Like a lot of the loans that come up in the movie The Big Short, we didn't offer. I would go out and try to build a relationship with real estate agents, and they would say, hey, do you have that fast and easy loan? Because Countrywide had fast and easy. I'm like, no, we don't have fast and easy, which is basically like you didn't document income or assets.
Let's
okay?
go. Give me that.
Yes. Or they would say, oh, do you have that pick-a-pay loan? Well, that's a negative amortization loan. Mm-hmm. I'm like, nope. They're like, don't bother coming in here. Like, if you're not doing ninja loans and you're not doing pick-a-pay loans, I'm not going to refer you. Those were the same agents that when things crashed, the first thing out of their mouth was, those damn lenders, and their exotic products, they're the reason why things crash. I'm like, MF or what? Mm-hmm. I'm like, I was a young, hungry loan officer with a baby on the way, trying to provide for my family, trying to build a relationship with you, and you kicked me out of the office because I didn't offer ninja loans or pick-a-pay loans, right? Like, short memory. Those types of agents are the same agents that also, when I try to meet with, they say, well, I only work with lenders that contribute to my advertising budget. And I take a deep breath and I get really comfortable with making this type of statement. Hey, John, I love great marketing ideas. And I'm looking for people to partner with where we're going to enjoy working together. We're going to be aligned. And when it makes sense, we can help each other out with our marketing efforts. But right now, I don't know you and you don't know me. You don't know if I do a good job, just like I don't know if you're the type of agent I want to work with. So I'm not overly comfortable with entering into any relationship leading with money because I tend to only spend money with relationships that I know are the types that are long-term and the types that they like how I work and I like how you work. So let's do this. I would love to discuss with you in the future how I can participate with helping out in your marketing efforts. But in the interim, can we first make sure that we're going to be a good match and a good fit? Mm-hmm. Right? So that's a type of script that I would go into. Or I would either use this one or I'd couple the two together. And I would say, John, I found most agents that I work with care more about how many transactions I can help them close, or how many transactions I can bring to the table, or how many transactions I can help them sell versus how much money I can give them. And let me tell you what I mean by this. I could give you $1,000 a month right now to go towards your Zillow. Mm-hmm. Now, you don't know me. I don't know you. We have no idea if this is a good relationship or not, if we'll enjoy working together. Mm-hmm. And with that $1,000, I may or may not see any business close. You may or may not see any business close. Or I could sit down with you, figure out where it is you're trying to go in your business, find out where you have some gaps. I could fill those gaps. Your gaps may be in lead conversion. Your gaps may be in lead generation. Your gaps may be in procuring referrals from your past closed clients. But if I could show you how I could help you sell 2 extra homes a year, those 2 extra homes that you would sell in today's market are worth well more than $12,000 a year. If you did the math with me, right? Your average sales price is $400,000. You're making 2%. That's $8,000. 8,000 times 2 homes that helps you sell is $16,000. $16,000 is more than the $12,000 I would have given you with Zillow. So I'm not opposed to doing Zillow with you, but at first, let's figure out if you like how I operate, and let me figure out if I like how you operate. And by the way, I have to remind myself, some will, some won't. Who cares? Move on. If that guy or girl that's not good enough for them, then peace out. Peace out. There's a realtor in Orlando, Florida that I do not work with. I do not work with her because she literally told me that I only work with lenders who pay money. And if you'll pay me an extra $500 a month, I'll leave my current lender to go to you. You know what that tells me? That's like dating someone who cheated on their spouse to be with you. That's all well and good until they cheat on me to be with the next person, you know? Like, no, if she's willing to leave that person for me for an extra $500 a month, then like I'm a clown. I'm a mark. I hang out for what, 8 to 18 months before someone else comes in, the next highest bidder. That's not the type of relationship I want to be in personally. But what I want to do for this guy on YouTube, which I wish I got his name, but thank you for tuning in on YouTube. By the way, if you're not tuned on YouTube, make sure you go to at the Loan Officer Podcast and subscribe to our YouTube channel. Thank you. Yep. But there are about 4 different ways that we as lenders can legally participate with the real estate community as it pertains to supporting their marketing efforts and their lead generation efforts.
Can't wait.
No, you can wait. I'm going to make you wait. That's kind of how this game works, right?
I swear I'll walk off this set and come back and get the cameras later when they run out of battery.
No, I'll be quick. But normally, what do? You wait. You just sit there, take deep breaths. You probably start thinking about aliens and marijuana and video games.
A different order, but yeah.
What's your order?
Video games. Now, I got back into gaming, bought me a Nintendo Switch 2. Haven't even played it yet.
I wouldn't even know the difference between a 2 and a 1.
So
how you like me now? How you like me now?
The first illegal legal way we can pay to play with realtors while not actually paying to play, but kind of paying to play is what does.
Yeah, look, the easiest way to enter into some kind of a co-marketing relationship is through Zillow, right? Because I like Zillow because I can pay Zillow directly. But what people need to understand is that the lender can only pay for 50% of the total ad spend. So if John Coleman, a realtor, is spending $4,000 a month, John cannot give $1,000 himself as the realtor and find 3 lenders to each give $1,000 a piece. That doesn't work, right? The realtor has to spend at least 50%, then the lenders can spend 50%. Gotcha. But I want to let y'all know that when I'm sitting down with a real estate agent and I'm having this conversation about, hey, look, I'm investing in you because I want to be your partner. I'm giving them 5 other ways that I can be a great partner outside of giving them money. So giving them money is just one of many weapons that I have, because I still have my CRM. I still have my relentlessly pursuing all leads till they buy or die. I still have, how I help them get offers accepted, the way that I handle the transaction, et cetera, et cetera. Like there's many more reasons to ever work with me than my money, but I don't mind spending a little money if there's some ROI to make there. And I understand that I'm playing the long game. So the easiest way to participate is through Zillow, but I pay half, the realtor pays half. And I tell that realtor straight up, and we've done an episode on this. Here's what I care about, ma'am or sir. If I'm spending $500, that $500 is because I'm looking to acquire a new client every single month. I don't care if it's your next door neighbor needing to do a cash out refi. I don't care if it's your listing who needs to buy a house. I don't care if it's a past client who's calling you to buy an investment property. I am participating in your marketing and advertising efforts through Zillow, but what I'm looking for an ROI on my end is 1 closed transaction a month for every $500 I spend. And in order for me to do that, I probably need about 4 or 5 leads a month because my lead conversion is somewhere between 15 to 20%. Like I'm having that type of conversation. That's the easiest way to enter into a legal, and you can call it what it is. It's a legal pay for play. And there are thousands of originators and mortgage branches and companies out there that participate, and it is currently deemed legal and ethical.
That's literally just cleaning money. That's money laundering.
I don't think it's money laundering per se.
Hey, instead of me giving you $500, I'm going to give you $500 in this roundabout way. So
correct.
It's money laundering.
Yeah, but if the realtor didn't want to work Zillow leads themselves, then it's like, how else am I going to give them the money? Right. But anyhow, but you're correct. Now, the next way you can do it is through an MSA.
Marketing service agreement.
Marketing service agreement. Yeah, we just recorded a coach's corner that we're going to put up eventually on the YouTube channel.
The YouTubes.
And where I talked about MSAs for about 6 minutes, maybe 8. I don't know.
Deep dive. So if you guys want to go check that out, link below.
There we go. I like where you're going with that.
I don't like saying that because then I got to edit it into the video. But
More work for John. Way to go.
Yeah.
Look, MSAs work this way. A real estate office is paid X amount of dollars by a lender.
Mm-hmm.
That real estate office has to perform or give access to X amount of dollars worth of marketing exposure to the lender. So this isn't we're paying for leads. Like, no, we're paying to market. What does market mean? It could be signage on the building. It could be a landing page on their website. Okay. It could be access to their Tuesday meeting. Mm-hmm. It could be a sign writer in every listing, right? And there's third-party companies that actually will audit and put a value or evaluation on MSAs. And then if you're doing them properly, you're supposed to every single month or every single quarter report back to your compliance department. If you're paying $5,000 a month at that Keller Williams office, you need to be able to show them, like, here's a picture of the sign. Here's a picture of the sign writer. Here's where I'm on the website with my own landing page. Here's a picture of me at the Tuesday meeting doing my presentation, right? You have to be able to justify the money that you're spending. The catch on a MSA, the money's typically going to the broker, not the agents. So if I'm a lender paying the broker, yeah, I'm paying the broker to have access to the agents and to be able to openly market and promote myself. But it's not like those agents are getting the money. When I do Zillow, the agents get the money. When I do an MSA, typically the broker or the owner is the one getting the money.
Gotcha.
But there are legal, successful ways to run MSAs. Like, I mean, there are Movement Mortgage launched their business, but they went all in on MSAs and they saw their volume skyrocket. And if you do MSAs well, it's a long game, right? Yes, you may be paying some money to the brokerage to be the preferred lender, and therefore as a loan officer, you're getting a reduced comp for the loans coming out of there. But you don't get reduced comp when that borrower refers you their friend, family, or neighbor. You don't get reduced comp when that borrower calls you back for a refi. You don't get reduced comp when you cross-sell the listing agent who doesn't work at that brokerage, and now you have a relationship with him or her, and they're referring you. So MSAs is a more legal way and a more kind of next level way. Now, you want to go next level?
I want to clean the money good, Dustin.
I don't like this way, but it's happening. No, it's happening. Just because I don't like something doesn't mean that it's not happening. And by the way, y'all, please hear me when I say this. Slow down if you're in your car.
Hear ye, hear ye.
Hear this. Just because it's happening doesn't make it legal. Just because it's happening doesn't make it right. Just because it's happening doesn't mean, just like we talked about with kickbacks, that in 2 or 3 years, you or your company couldn't get your wrist slapped. And that real estate brokerage couldn't get their wrist slapped. Like the CFPB may very well be defanged, declawed, toothless today, but is that going to be the case in 2028? We don't know. Only time will tell. And just because the CFPB is toothless, it doesn't mean that the states aren't ratcheting up their capability to audit and enforce regulation. So it's always buyer beware just because it's being done. It's kind of like when I was a kid, my mom would say, well, if your friends all jumped off the bridge, would you jump off the bridge too? Did your mom ever say that to you?
I mean, in a roundabout way, but I was like, yeah, that's how you get friends and be popular. You don't want to be a nerd or a loser.
Well, correct.
So I don't like.
And if you were me, I'm like, Mom, my friends were following me off the bridge.
I was the one leading the charge. At least I was the leader, so you should be proud of me.
Correct. But the point was, just because others are doing it doesn't mean you need to.
No, people are going to do it because people are humans, and they're going to do it until they get caught and then scream, woe is me, I'm so sorry, I'll never do it again, and probably do it again because that's how humans are, and that will never change.
Okay. So the next level that I don't like that's being done, but is being done, is you have realtors going out and getting licensed, which is fine. Then they're hanging that license and really just getting a kickback or a referral fee. I don't like that. I think that realtors should have to do work on the file. Like, at least take the 6 data points that you need. Like, we did this at my last mortgage company, and I mandated. I said, look, if you're a licensed realtor and you're here to try to squeeze more money out of the transaction, then at a bare minimum, I need you talking to the borrower, and I need that borrower applying on your website. At that point, if you want to transfer the file to another loan officer and do a commission split, by all means, we can do that. But when you get licensed for the sole purpose of, here's a name and a number, John, call them, and oh, by the way, I want you to give me a commission split, I don't know if that's really on the up and up. I'm not the compliance police, right? Like that's not me. But the little bit I know about this industry and the little bit I've studied about this industry, I'm like, eh. So on an even larger scale, so that's an individual realtor. We have men and women all throughout our industry. When it's a big enough account, they will actually onboard usually a team leader or a broker owner as a non-producing branch manager. Now, they are an employee of the company, which means they have to do, probably their annual compliance and do some, oh, I'm an employee of the company. I got to do some HR type paperwork and some annual recertification paperwork. But on a very high level, they are making them an employee of, and then literally giving them a portion of the monthly or quarterly profits. So it's like, instead of doing an MSA, then they're going a whole different ballgame and say, I'm going to hire this person as an employee. I'm going to make them a non-producing branch manager. I'm going to assign one of my LOs to their office. And then I'm going to pay my LO. I'm going to pay my processors. I'm going to pay my overhead. I'm going to pay for my credit reports. Like, I'm going to pay for all the things I have to pay for. And then with the money that's left over, this non-producing licensed real estate agent, but non-producing mortgage professional is now actually getting money, quote unquote, legally. What I say, not audited yet. Some people say legally, I say not audited yet. But they're getting compensated. Like, that is happening right now in the market. Like, the number one retail lender in America is doing this, right? Top 30 lenders in America are doing this. So, and I'm not complaining about it. I'm not saying it's illegal. That's not my job. That's not my role. I'm not a compliance person. I don't have a law degree. I tend to probably rub compliance people the wrong way because I probably push the envelope myself a little bit. Yeah. But for the people that tune into the show, they just need to know, like, this is what's happening. You don't need to do kickbacks when there's actually quote unquote legal ways to do it instead of just the blatantly illegal way to do it. And then finally, the last way, and this is an oldie but a goodie, is a true joint venture, a true JV. But in order to do a true JV, which Guaranteed Rate does these amazingly. Like, they do them really, really well, which I know Guaranteed Rate's now called Rate. I just haven't woke up and smelled the coffee just yet. Sure. But when you have a real estate company that does enough volume, you can actually start a whole brand new company, right? Different name. And that brand new company is half owned by the mortgage company, half owned by the real estate company. At which point they have their separate EIN, their separate accounting, and you can actually do a true joint venture. But those are things that you only do when you're large enough. There has to be enough volume coming through for you to start your own company. So if you're not big enough to do a JV, you probably look at an MSA. But MSAs only the money goes to the broker. Very rarely does it go to the agents. If you want agents to go get the money themselves, you probably do it through Zillow. And then a new kind of state of the art, what's happening now is actually finding ways to quote unquote legally employ the real estate agent or legally employ the broker owner of that real estate office and then put them on payroll, at which point you can legally compensate them for the work that they performed on said files. So those are ways that if you want to stay away from kickbacks, but you still want to partner with real estate agents, that you can do. But there's plenty of top producers out there who spend no money. Like, this is not a one size fits all. There are plenty of top producers who spend no money. And then there's some that they built their entire business off of MSAs.
Huh? Yeah. MSA. Yeah. So that's crazy, man. There's 4 ways, 4 things you loan officers, you don't cross the line because you might get in trouble later.
Look, this was a special request that came in from YouTube. You and I love to be crowd pleasers.
Fix your pronouns. You, just you.
Fix love. My pronouns.
Yeah, you just love.
Okay. I'm a man of the people, John, and I love to serve. But, yeah, that's all we have to say about that. There's not a whole lot more we can probably get into. The goal of today's episode was simply to answer a request and then, lay it out so people know what's going on. And then from there, you can check with your branch manager, check with your owner, check with your compliance department, and figure out what strategy you want to deploy. You can deploy a strategy that says, hell no, we won't go, at which point you do nothing, which high five to you. Or you can go the exact opposite, where you're like, I have $15,000 a month that I'm willing to invest for the next 6 months. Where's the best places to deploy that? Or you could fall somewhere in the middle. The best part about this industry is that it is truly, as our buddy Greg Scherer says, it's all of us. And by all of us in this industry have a right to run our business how we want to, as long as it's legal and ethical. And all of us have a responsibility to serve our communities. So this episode wasn't to show favor over one or the other. It was more to educate, let you know what's going on, let you know what's possible, and maybe give you some suggestions that you could deploy into your business model. On that note, he's John Coleman, I'm Dustin Owen. That is all the time we have for you today, but we do look forward to catching you on the next episode.